What's going up, team? I hope you guys are having a fantastic day today. So in today's episode, we're going to be talking about the SMA line, or the simple moving average line. This is a trading indicator that hundreds of thousands of traders use to get a overall idea of the stock, the trend, good support or resistance points. So let's pretty much dive right into it here. So we have UGAS up here, and how to set your SMA indicator is, it's very simple. You got to go up to studies, click on that, and then you can either click add study or edit. I'm going to click on edit right here, and what you're going to want to do is you're going to want to type in simple, SIM, and you're going to want to go to this one right here, and then you're going to want to double click this one, or you can click add selected. And once you do that here, so boom, that pops in. So since I already have that one up here, I'm going to delete this. And then you're going to want to go to this little settings icon, this little gear wheel. You're going to click on this. And then this is how you can kind of customize your chart here. So you're going to want to go to length. Length is very, very simple. This is just, in simple terms, it's the average closing price over the past 5 days is this line, so it's not too complicated. And so if you would rather have the last 200 days, you put in 200. If you would want the last 5, you put 5. But I feel like 50 is a very good number because it acts as a pretty strong support or resistance point. But before we do that, let's kind of continue here on the customize part. So you can change the color of it just by clicking this little color box, by clicking more, and you get all kinds of good stuff here. You can customize one, and then you can click on the style if you would want it dotted or not, and then you can do draw as, and you can do all this funky stuff. I don't do that. I just like a line. I like it simple. I don't like it to be too overwhelming when I'm looking at a chart. That's just kind of how I am and how I always have been. So you're going to want to click OK right here, and then you're going to want to click apply. And since I already have it up, nothing's going to have change here, but we can change the color just so you guys can kind of see what happens. So let's change it to green. Let's click that and then click apply. Boom, now that changes to green. I don't like green because it gets me confused with the buyers and the sellers, but that's just me. I don't like it to be too, close in color like this. But this is just for a video. I'm obviously not going to use this color for a real trade. That's just how I am. So as you guys can see, you guys can make pretty good trades just by judging multiple factors from the SMA line here. So it acts as a very strong support or resistance point in this stock. And if you guys know anything about resistant breakout strategies or stuff like that, that's pretty much what the SMA line is good for, and what you can do to pretty much find stocks that have that potential to pop and squeeze up like this. So what you're going to want to do here is, I always draw out the support and resistance points just like that. Let's delete these. These, I believe, are from when I traded this stock in the past. Let's go clear drawing set just so you guys can see it. All right, so as you guys can see, there's a pretty strong resistance here at about 669.46, and a pretty strong support here at around 52.35. And you might be saying, okay, Carter, but how does the SMA line get involved? Well, as you guys see this thing pop up, this is how you can find good, solid entry points. So what often traders do is they wait for a pop over the simple moving average line. And when it pops up, most of the time it will act as a new support for the stock to push it up. So as you guys can see, it nearly taps it once, twice, it taps it 1, 2, so that's 3, 4, and pretty much 4 times before it starts to come sideways, and it does pretty much consolidate. It averages all this stuff out, so you don't got to worry about up and down price, and it does fall back through. But if we would have made a trade from up here, we would have waited to pretty much until it hits that resistance point here, and that's most likely when we would have sold this stock. So just by judging that, we could have had about a 29% return off this swing trade here, because this is on the 180-day analysis. So as you guys can see, this stock does fall, and what you would want to do is you'd want to set a new support line right here, so you guys would be notified just from this. And just by judging this, you could make still good textbook trades that are around 9% return. So as this stock falls off, now you're looking at this saying, okay, now it popped up and squeezed up to almost $60, and it's falling down here. So what you could do just by judging the SMA line is say, okay, I'm going to hop into this thing at $56 flat, because this stock has that potential to squeeze up. I'm going to set my stop loss at around $54. So that profit, if it pops back up to previous resistance, is about, let's see what that is, because we like to do any 2 to 1 to 3 to 1. So we risk, let's see what that percentage is. So we risk around 2.5% for a return if it pops back up, not even all the way back up here. But if it pops back up, so let's click on here. So around 5. So that's about a 5 to 1 ratio for your risk management. And that right there would be a very good trade. Now you might be saying, Carter, well, why wouldn't you hop into this when it was up here and it bounced here? Well, honestly, I don't trade stocks that are in this consolidation mark, just because I like to trade stocks that have an overall upward trend. And if you look at this, you might be saying, okay, well, it does, but it is 100% consolidating. So what I would do is I would probably go up over these highs and set some alerts here. Just because if that stock starts to squeeze up, I would want to be notified to see if we get a play on it. But then after this stock popped over here, I would not enter this trade at around $58. That would be chasing it 100%, because this stock only would have around let me see, you'd be risking around 5 to 6%. You'd be risking around 5 or 6%. So this would be a 1-to-1 ratio trade. I would not ever trade this. I would wait for a little pullback like we had, and a beautiful bounce off this SMA line to continue its upward trend. Wait for it to break over this resistant point. If not, sell some shares here, not all of them, and have this stock push back up. And then I would wait for a break below this. So I would exit this trade somewhere in here, because that would save me from a big fall. Also, when the stock is above the SMA line, that just means that the buyers are more in control of the stock. So you always want to trade with the trend, because if you trade against it, you will almost 100% lose money, and you're going to blow up your account like that. So that's what I would do, just because if let's say you waited and you say, okay, I'm hopping in this thing long right here, because that's where previous support is. So you could, and but the SMA line or any of the moving average lines would be all acting as resistant points, because this stock will have a lot more selling power than buying power. That's how I always have traded. I've never, traded a stock that has had in consolidation, only when the spreads are large and it's a lot more consistent, and the SMA line is below it, because once it gets below it, then buyers are in control, so you will always almost make some more money here. So what I would do is I would wait for a bounce. I would set some alerts here at around $66, and I would wait for this stock to come back up to see if we can get a little breakout from this. So we want it, mark it is above six, almost let's just go to 66 flat here. So create. So that's how I would use the SMA line as my indicator. So in a brief definition here, the SMA line is the simple moving average line. It is pretty much however many days you set it, it is just the average closing price of the stock over that course of that period. So it fluctuates with the stock, whether it goes up or down, and it pretty much just averages everything out. It's a very useful tool. So, that's it, though. I hope you guys enjoyed this episode. I hope you guys learned something. Remember to always stay happy, stay positive, and I hope you guys have a fantastic rest of the weekend. And let's start Monday off killing it. Let's try something, try to make some money, try to hit those small gains. So that's it, though. Take care.